Have you ever wondered how much Mantle's price action could appreciate in 2025? Well, in today's video, I'm going to be sharing my Mantle price prediction for 2025 and where exactly I think that price action could be heading. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and jump into the price action and find out where Mantle could be heading. So here we have Mantle paired up with USDT. We are on the 1-day 𝗕𝗃𝗃 chart. We're using 𝗕𝗃𝗃 here because it has the most amount of data that I could find in a reliable way, and it's quite an interesting price chart. Now, there's not a huge amount of history here. As we can see, price action really only starts over here, which was on Monday, the 17th of July, 2023, over to the current point at the point of recording, which is today, the 15th of November. Okay, so what's really interesting about this is the price action in itself and the way that it's moved. Now, for us to be predictive over where the price action could be heading, we are going to rely on a couple of tools. We're not really going to be using indicators, although you've got your EMAs, your SMAs and stuff like that, which can be helpful. But we're going to really utilize price action analysis because it is the most powerful, in my opinion. It allows you to kind of be predictive over where the price action is heading in the future, whereas indicators tend to be a little bit too laggy and they don't really give you predictive capabilities. They only tell you what's already happened. The other tool that we're going to use is we're going to use the Fibonacci retracement and extensions. And we're going to use this because of the psychological elements that are associated with it. So our price action analysis is going to be monitoring the buying and selling behaviors. And then we're going to use the Fibonacci sequencing to kind of see how price action has reacted historically to certain levels and what that might mean in terms of the psychological elements when it comes to the price action. Now, I'm going to put these settings up on the screen here so you guys can pause this if you want to, or rewind it and capture all of these kind of different settings. Ultimately, we're using pretty much the standard Fibonacci retracement settings, 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1, 1.618, 1.382, 1.236, and then I've added 0.882 and 0.702. The 702 is not technically a Fibonacci level, but it is an area that Bitcoin reacts to quite a bit, so it's good to have reference to that. Now, if I zoom down to the bottom here, one of the main takeaways is this little tick box at the bottom, which is fib levels based on log scale. If I don't have that ticked, you can see that the price levels on the Fibonacci retracement tool change based on this button being ticked. Now, I'm ticking this box because my charts are in logarithmic. You can see the little L in the bottom corner here. If I turn that off, it would look like this. It looks a little bit different. It's not actually that different on Mantle's price action, but it is on other charts. So I always use logarithmic. It makes it easier from a crypto analysis standpoint. Okay, so we're going to use the Fibonacci tools and then we're going to use Elliott Wave as our price action analysis. It's a complicated subject. I did put together a whole course on it. It is well worth understanding Elliott Wave if you want to understand how the buying and selling behaviors actually work and what that means going further forward and given those predictive capabilities. I usually do run 50% off. Coupon codes are usually in the Discord server or in the description down below, so you can check all that out. Okay, so those are the two things that we're really using, right? We're using Elliott Wave in conjunction with the Fibonacci sequencing. Okay, let's make a start then. So we haven't got a huge amount of data here. That means that there's not a huge amount of behaviors that we can learn from when it comes to selling and buying of MNT. But there's a little bit here that gives us a bit of an idea as to kind of what is going on. So let's go ahead and take a look at what was happening here. So to start with, we have a peak up here in July of 2023, and then we have a bottom over this side coming in October 2023. Now we know that a lot of altcoins did find their bear market bottoms in October of 2023. There were a few that were more around like 2022, but for the most part, the majority of them were October 2023. So we can actually ignore this first point up here because it's not actually that it's not that powerful to us. It's not useful to us, knowing that we kind of slipped down into that bear market low point. All that we really want to know is that we had a bear market low that came in at 30.78 cents. Now we did rally up quite a bit, coming in actually at $1.55. Okay, now that move in itself was a very interesting one. I think it was like 400%. Let me just check, see where that was going. 403%. Right, so we had a 403% move to the upside. It was pretty decent, right? Basically October to April. Okay, so October 23 to April 24. Now within that structure, we can see a very interesting kind of subset of patterns. We can see here that this is a double zigzag pattern. Now, a zigzag pattern from an Elliott wave perspective is very interesting. It's very telling. Okay, so a zigzag pattern is a 5-wave move coupled with a 3-wave correction and then another 5-wave move to the upside. Okay, that's a zigzag. So you'd have an A, B, and C is what it's termed as a zigzag. And what I'm suggesting is that we have a double zigzag, okay, happening inside here. Let me show you a zigzag pattern just quickly right there. There's one, okay, and then if I try to find the exact one that is playing or is of reference in here, I think it sits actually from here to here. This is actually a really interesting one. This in itself looks like a double zigzag, and it might be that that's a double zigzag. It might be actually a double, but anyway, nonetheless, I think I'll put it right inside here so you can kind of see. This would get marked up as a W, X, and Y with those internal ABC workings. Okay, so it could be a double-double, which would be a little bit peculiar, but it's not unheard of. Okay, so there you go. So anyway, we'll mark that up as a WXY. We know it's a complete structure. It was a 400% move from the lows to the highs. It doesn't really matter looking back at the history here what those internal workings were, because we know that we kind of reached that kind of top and we saw a pretty significant correction to the downside. Right? So it's not overly important, but for the case of the video, we will do the due diligence and showcase where those Fibonacci levels were also going. And here you can see that we came up to the 1-to-1 right there, 155, 155. Okay, so what typically you would have expected to find, right, within these kind of patterns is that when you complete, let's say, a W wave here, and we have the retracement, the Y wave would mirror that of the W wave. It's actually more typically for an ABC structure where C would mirror A, but in this case, it's also quite apparent that W has mirrored, or Y has mirrored W, right? Now, this would potentially overextend a tad, going between 1 and 1.236 on those fib scales. Okay, so here you can see that we got rejected exactly right where you would expect it to, right? So we have this perfect pattern to the upside, and basically we started to see a reversal in the market to the downside. Okay, that's quite important. Now, this move to the downside is also very interesting. It's interesting because you can see these zigzag patterns playing out over and over again. And in this particular case, we have what is known as a WXYXZ. Now, the reason for that is, again, you use your Fibonacci levels, and this would have been very predictive during this pullback, okay? And you can see right inside here how we've pulled back. Now, this pullback here, and it's actually in line with our expectations, this relief rally to the upside, and then immediate rejection in August 5th was a little bit peculiar. It was peculiar because there was no signal to say that that was going to happen. Okay, so maybe not as obvious as maybe I was at first thinking. But here you can see also this move to the downside comes right in line with the Z wave structure. So for the most part, this has kind of behaved a little bit peculiarly, but because we can see these internal workings, we could prepare ourselves for a double zigzag, which is what it was to start with. So we would have been looking at this through that lens of a WX and Y finishing here, but this downturn in the market means it's actually a WXY structure. Specifically, since we have reached higher here now, we can look back in hindsight and say that that is not a WXY, but is in fact WXYXZ. Okay, we know that because of the most recent price action. Now, why is all of this important, right? Talking about the history, talking about the behaviors that go into this, because understanding these behaviors helps us be predictive over what the behavior is going to be most likely, or the most probable behavior that we're going to see going further forward. Okay, so we saw very explosive moves to the upside. In fact, all of these moves, both to the upside and to the downside, are explosive in the way that they move. Let's pull some empty space here, right? So those 5-wave movements, these are known as impulsive movements. They're a trend, right, on the smaller time frames. That's what we're seeing. And when we see these ABC structures, these zigzag patterns, right, these A, B, and Cs, these actually contain internally 5-wave movements like this, right? So you have 5 waves going up, 3 waves coming down, and an additional 5-wave moves going up, right? So you have these little mini trends going on inside your bigger correction, okay? kind of badly drawn maybe, but as you can kind of see, if I take those off, you have a corrective pattern, which is ABC, but internally within there, you have those little 5-wave movements, those mini impulsive movements. So we know that the market in both directions, to the up and to the down, right? So whether we have those kind of WXY to the downside, or more specifically where we have that WXY, X and Z pattern, internally there you have those zigzags, those ABCs going down like so, okay, and then inside those ABCs you have those little mini trends, right? So you can argue that we have a really good and interesting kind of tell on what is going on with the inner workings, with the behaviors, the buying and the selling, whether it's buying in FOMO droves or whether it is selling in significant amounts. We are creating those impulsive movements. Now, as we kind of get into this most recent price action, we can see a lot of overlapping nature right here, not inclusive of anything major. We have 3-wave corrections all over the place, okay? So we have move to the upside, a 3-wave move, actually it's a 3-wave move to the upside, 3-wave move to the downside, explosive move here. Now, why is that important? Well, 3 waves, as I said, although they are containing those micro movements that are more impulsive, they are, of course, telling us that the market is in itself corrective, not necessarily long term. But the positive news here is that this market is very explosive at times, and those explosive moves are leading us into other more complicated structures. Now, for that, we got close to the 1.618. We didn't quite hit it there before pulling back towards the 200 EMA, but that's actually a positive sign. So this particular structure here is mirroring, in my opinion, a potential expanding diagonal-based pattern. We can see the 3-wave structures going on, okay, and we can have a little bit of overlap within that structure as well, and that could potentially mean that we're looking at a larger wave 1 structure. So let's talk about those 5-wave movements, right? Those impulsive 5-wave movements that you see here, okay? We are potentially in the wave 1, okay? Now, the wave 1 of that could contain what is known as a contracting or expanding or leading or ending diagonal-based patterns. I think we're looking at an expansion in a diagonal pattern. So if I draw a couple of trend lines in here, I can show you what that looks like in a perfect world. In a perfect world, you'd have a 5-wave pattern that looks like this: a wave 1 that comes up, a wave 2 that comes down quite deep, a wave 3 that is bigger than wave 1, a wave 4 that comes down deeper than wave 1, but not deeper than wave 2, and then an explosive 5th wave move to the upside. So as you can kind of see, this expands out over time. Now, what are the requirements with this? Well, the requirements are that wave 5 must be the largest wave, and wave 3 is not allowed to be the smallest wave. Wave 4 is allowed to intersect with wave 1, but is not allowed to cross deeper than the wave 2. Okay. Other than that, there's no Fibonacci sequencing references that are guarantees, right? So you don't see 1.618 on the wave 3. That's not necessarily something that you see. We got very close to it in this particular instance, but we didn't actually pass it. Again, no must-haves kind of situation outside of wave 5 must be the longest, wave 3 must not be the shortest, and wave 4 is not allowed to cross the depth of wave 2. Outside of that, there are no other kind of major hard and fast rules for it. Now, when I come back down into our structure here, what are we talking about? Well, I'm talking about the idea that this is a wave 1 to here, 2 to here, 3 to here, 4 at the moment, but not yet intersecting with wave 1. And then we're going to look for an expansion into a really big wave 5. And if I draw this in, we'll be looking for this to expand out over time like so. Wave 4, of course, could drop down significantly further, doesn't really matter. And then we have this one here. Now, this can happen in only really 2 places, actually 3 places. It can happen in 3 different areas, right? So we can have it appear in the wave 1, okay? So it could appear in a wave 1, but it could also appear in a wave 5, okay? So it could appear in this end structure. So you could have a wave 1, 2, 3, 4, 5 like that, okay? So you can have it in the wave 5 or in the wave 1 position. Or the other place that you could find it would be in an A wave or a C wave. Okay, so you could have it in your A wave here with something that looks like that, or it could happen in the C wave. Now, in the case of mantle here, this is either a 1 or a 5. Okay, so it's a leading position. So that's not bad. That's not a bad place to be. Now, obviously, as we start thinking about what this might mean for mantle, it means that there's going to be some pretty big moves, but there's also going to be some volatility that's not necessarily deemed positive. But nonetheless, it looks pretty decent. But if we reflect on everything here that is going going on, we can see that the structures are starting to emerge for a pretty significant surge to the upside. Now, I think that we can be, or we have enough information here that we can be a little bit more predictive over where we think that price action is going for 2025, right? So what I'm going to do is I'm going to zoom right into this particular wick. This was the 5th of August low that came in at 47.50. If I move my Fibonacci retracement tool down to 47.50, it's going to be a little bit difficult, but I'm going to try and get it right on the nose. It's going to be right there. There we go. Okay, now if I zoom out of that, this is what we're looking at from a Fibonacci sequencing level. Now, in here, I'm going to go ahead and remove this yellow box because it's going to cause too much confusion otherwise. Here we can see that there's an interesting area of 50% on the fib levels. Okay, so this area is going to be an area where we're going to find some selling pressure. It's actually going to be between 50 and the 0.618, okay, 50% to 61.8%. Now, in terms of the price action of that, I'm going to remove these this noise off the chart here as well, so we can just remove that. We can see this would be between $1.06.5 and $1.28.98. Now, if I pull this across to where we were in that kind of corrective pattern, you can see that this was an area where we turned into resistance. So this is going to be a first area where we're going to see some resistance being met for MNT. A little bit above that, though, we can go up into new all-time highs. Now, here we can see that 786 is going to be a very interesting zone. Okay, all the way up to that 882 and potentially even a little bit higher, but I'm just going to mark this up as the 882 for now, which will be 88.2% of that first initial W, X, and Y. So from here, new all-time highs between 169.23 to 197.63, but that's not necessarily where things end. Just areas that with price actions more than likely going to find some form of resistance. Okay, so interesting. Now, our most typical area where we want to be thinking about the price action potentially leading to is going to be this area right here. This is where I think the bull market peaks are more than likely going to be. This is between 1 and 1.236 on the fib scale, and this is measured against the W, X, and the Y, and I'll explain why in a moment. Now here we can see that we have a targeted range between $2.39.16 to $3.50.23. Okay, now this would mark the idea of a double zigzag basically. So we have the three wave moves to the upside, the WXYZ to the downside, and then we're going to be looking for, in my opinion, we can look at two different things. We could either look at it just as an ABC structure to the upside with that kind of expanding diagonal pattern, finding the resistance at the 618, quick correction, and then another push to that higher range there. That would be deemed under the kind of 5-wave pattern that I was explaining. So we'd have the kind of expanding diagonal for the first one, and then maybe the next one's a more impulsive kind of run to the upside like so, and you'd have an ABC. Now these two things with the WXY and an ABC wouldn't be paired up together. They would just be deemed as different corrective patterns that are playing out over time, right? So you have your WXY, XZ move to the downside, just basically bridging those two patterns together, but there's no correlation between the two, which means there's no guarantee that you move to that $239 to $350 level. The alternative, of course, is that in fact we maybe move more towards an ABC structure in here first, so A, B, and C structure with a brief correction between the two, and then an additional ABC structured move to the upside to kind of get us into those targeted ranges, which we'll just wrap up for the purpose of today's video as a bigger W, X, and Y pattern. Wouldn't technically be correct, but it would be an idea to kind of get kind of wrap it all up in a nice neat bow. Yeah, a nice way to kind of articulate it a little bit. But for the most part, as you can kind of see, that's how it would look to me. Now, obviously, depending on the formation of these next moves will depend on whether or not we end at 239 to 350. I think 239 is going to be an easy-ish target to kind of get. I don't see us not hitting that, in my opinion. It's not a million miles away from where we are. We're talking about a 240% move. To $3.50 is also not that hard. It's like another 400%. So it's not terribly difficult for MMT to do this. So these targets might be super conservative, and therefore we might need to remeasure the distances as we start to kind of creep up here and actually predict out maybe different targets. What will be really interesting will be if we can get to that 1.618 at $6.49. But for the purpose of today's video, I think bearing in mind all the information that we have available to us today at the point of recording, I would be looking for Mantle to be somewhere between 239 and 350. But I also suspect that there's a high probability that we're going to smash through those targets and head out more towards some of these higher levels at around $6.50. But we don't have the data to support that. So at the moment, all I can suggest is it's going to be somewhere in that range between 239 and 350, but personally I think that's going to be an easy target that we may exceed. But it's just my thoughts and opinions on the data in the charts as I personally see it. What do you think? Let me know in the comments down below, or join us in our free Discord server and we can continue the conversations down there. If you found it useful and informative, smash the like button. If you are new to the channel, subscribe, and don't forget to check out that video right there. It's not one that you want to miss.